Hello there, it's Caleb Jackson again with another exciting installment of Stock Stuff. So get ready. Here we go. Today's segment is going to be talking about margin trading, specifically on the Robinhood platform for two reasons. One, it's the platform that I use and I'm most familiar with. And two, it's actually the best platform there is for margin trading because it's dirt cheap compared to other brokerages out there. So, margin trading, what is it? Good question. Margin trading is basically, you can kind of think of it as a loan, but I'm not going to talk about it that way. So, what it is Robinhood is willing to back you on your purchases, potentially, of stock or of options, a certain amount of money. And I don't know what their algorithm is, their formula, whatever, to determine how much money they think is okay for you to borrow. But I know it's based on two things. One is how much you have in your account, and then the other is how risky the stock is that you're looking to buy, or option that you're looking to buy or sell. So, first of all, something very important is you can't do it unless you are a gold member. Insert that joke. Let's continue. So I have Robinhood Gold. I'm in my first 30 days, so it's a free trial, but then it'll be $5 a month after that. You get some perks, but the main thing is basically this margin investing. So we talked about what it is. This is how much they're willing to let me that's how much they're willing to part with to let me invest with. And this is how much they're going to charge me. This is the part that I was saying is dirt cheap on Robinhood. If you look at other brokerages out there, this number goes up to around 9, 8.5, 9 on some. I've seen them, a couple that were just under $6, but nowhere near 2.5%. And it was 5%, but they dropped it, they cut it in half. So this is by far the lowest out there that I've seen, with one that actually is a established brokerage. So that being said, free money is basically what I'm looking at. So I said it was based on two things. So first of all, how much money you have in here. The second thing is how risky the stock is. So I'm going to look at these two up here, which is SPY. This is a safe ETF over time. They're going to let me spend up to that full amount that was right here, which if you want to get to this page, click account and then go to settings, and it'll have this information down here, only if you're a gold member again. So SPY, like I said, this is a safe one. They're gonna let me use that whole amount, almost 12 grand. AMC, not so safe. This one's a little riskier. So they're going to cut that amount almost in half, and this is how much I could potentially use if I wanted to buy of Robinhood's money. So there are two things to think about. One is, well, for me, that I'm thinking about, because I don't want to give you advice so much. You do with your money what you want. You do with what you want with Robinhood's money, but just realize you're going to be paying that 2.5% no matter what, even if you lose money. So you don't want to put yourself in a situation where you take on too much risk. So I personally will never do options trading with that money. You can, I know they let you, but I am not willing to risk that. So my plan, my strategy, if we look here at SPY over the past 5 years, it's going up 106%. So that's on average 21% per year over the past 5 years. But I know, because I did the research on it, if you go back for the last 12, 13 years, it's right around 13.5% year over year. They do charge a 1% fee for this ETF, but if you look down here, they also pay out a dividend that's over 1%. So I'm just going to cancel those two out just for the sake of simple math, and say that, again, it was averaging about 13.5%, but let's say, for example, they just have the next year sucks, and they only have an 8% return. you're still going to get, even say they have a crappy year, it's only 8%, you pay Robinhood their 2.5%, you're still getting a 5.5% return on money that wasn't even yours to begin with. So literally what I'm going to do right now, because I just set this up where I gave myself access to the margin investing, but I am going to spend that full amount. I'm putting the order in right now. It's a Friday night. It won't go through until Monday. Things could change, but I don't care if it's on a dip or, I mean, I know it's from the day, it's kind of on a little bit of a dip. But I'm just going to put this order in literally right now, and it'll be queued for market open on Monday. And that's it. And then I'm going to let it ride. Because like I said, even on a crappy year, you're still going to get a 5.5% return on money that wasn't yours to begin with. That's pretty good. And if it's just averages and has a normal year for the next 12 months, then I'm still going to make 7.5% on it as a return on money that's not even mine. So that's pretty hard to beat. If you were super confident, you could try options, you could try riskier bets, but no matter what, you're going to have to pay that 2.5%. So for me, it's not worth it to play around with that, because if you lose money and you lose the percentage, I wouldn't be happy with that. So that's my plan. I'm going to let it sit in there, and then as I keep putting more money into Robinhood, it's probably going to increase the amount that I can put into there or use for margin investing. So I'll probably max it out and keep sticking it into SPY. So I can't give financial advice technically, but I'm telling you I would not be putting it into riskier things. I'm going to stick with this thing right here, which the ticker is SPY, if you want to search it on Robinhood, and literally just letting it ride. I'm going to sit on this indefinitely. So that hopefully explains margin trading, margin investing, whatever. Yeah, that's about it. So if you got questions, comments, feel free to leave a comment. Otherwise, just go make yourself some money out there. Thanks.